Good morning, traders. It's 8:02 a.m. Chicago time on Wednesday, the 27th of April, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. For those of you who hopefully didn't miss it, but might have, Apple sees its first year-over-year revenue decline since 2003. Yesterday, the giant announced Q2 earnings of $1.90, missing the $1.99 analysts had forecast. Apple's trading at approximately $96 pre-market. It's down about 8% in the extended hours. It has definitely seen a strong move downwards, which has resulted in the Nasdaq and the ES also being lower this morning. On top of that, the UK showed GDP has slowed. It grew to 0.4% in the first quarter versus 0.6. Australia's in deflation came in. Australian consumer prices came in at 0.2 in March quarter, missing the 0.2 increase that economists were expecting. A total miss there. Twitter revenue and guidance missed as well. The company announced earnings of 15 cents per share, beating the 10 cents, but and revenue jumped to 36% to 595 million, but it was below 607.8 million that was being anticipated. And then on top of that, we have the Fed today. We're looking for an announcement today that the Fed would hold at 0.25 to 0.5%. Speaking of that, looking at the calendar this morning, what's ahead, we have pending home sales at 9 Central, 10 Eastern, month on month expecting 0.5, year on year expecting 0.8, and then crude oil inventories at 9:30 Central, 10:30 Eastern. Crude oil inventories expected at plus 1.5 million, prior 2.08 million. Distillate inventories negative 1 million, and gasoline inventories negative 1 million. And as discussed, the FOMC rate decision expected at 1 Central, 2 Eastern. The upper band is expected at 0.25, or the lower band at 0.25, and the upper band at 0.5, in line with the prior, in other words, holding. After the market today, we're looking for Facebook, and that's pretty much it. At 7:30, just about a half hour ago, we got advanced goods trade balance negative 56.9 versus negative 62.8, so slightly better. Just keep an eye on those earnings and these economic releases. We are in the season for it. Let's switch gears real quick to our charts from yesterday. Yesterday, an interesting trade, kind of stuck in between two key areas. I'm going to show you what I expected on yesterday's action. Oh, I lost my spot here. Let's turn up the resolution. Let's bring this to the forefront. And I unfortunately clicked and missed the spot here. So overall, the primary hypothesis is what we got yesterday. Basically, remember, I'm looking at the overnight on that. So the primary hypothesis here was for it to attempt higher, take out the overnight high, or attempt lower, and then eventually take out the overnight high. There was a bullish push, or a bullish view or bias on the market yesterday. Was looking for an open auction out of range, push down into that 2081.50 area, and then swing up to 91.25, targeting 93.25. That's what I was looking for. Was looking for support around 80.75. The way it played out is it pushed to 91.25 early, That's hypo 2, and then rotate it down to 81, and then the expectation is for a push down to 75.50. So if we push forward to hypo 2 here, we'll see that that's basically what I was looking for. Hypo 2, there it is. Hypo 2, a push higher, and then responsive selling into the prior day's range, looking for 75.50 as a target, and then looking for it to be to basically sit in range. And hypo 2 was in play early in the morning, but it didn't quite follow through to 75.50 for a strong base below. And overall, we had kind of a mishmash of hypo 2, hypo 1. Yesterday, it did push down and make a low, and then it made a higher low, and then it started to break that high. So overall, it finished up the day fairly bullish. One of the expectations for yesterday was a higher point of control and a push higher in and towards that 93 and a quarter. The session ran out of time. There was a fair amount of volume into the close, but it couldn't quite make it to that. So neither, in the morning through this section here, hypo 2 was in play, and then after that, once it got back up above the prior day's range, above the 83.50, then we're back in hypo 1 and we're looking for 93 and a quarter. All of that was canceled somewhat by what we got on the overnight session on the Apple news and so on. We had a pretty strong drop on the Apple report right back here, and the market has been sitting completely sideways all evening. 181,000 the volume for the session right there, and right there. 181,000 only traded versus the what we've been getting recently, 230 to 260,000. Very quiet overnight session, and a somewhat of a P or a B-shaped profile. The market has definitely found consensus. There's some high kurtosis here. If you don't know what that word means, essentially it means that the data set or the statistical histogram shows a lot of clustering in one area of the data set. And when that happens, we essentially have a market that is in equilibrium, that is in balance. And if you look at where we were yesterday on the day session, the point of control was right here in the 83.50, and the overnight point of control is at 83. The market is accepting these prices and is consolidating over the overnight session, and including yesterday's session, is consolidating in this range here. So what this is showing is there's a high potential for that energy to dissipate, that energy to break out and break away from here, and we have the FOMC to do just that. The low looks fairly reasonable. We do have two touches of the low here. We have a slightly lower low, basically a triple bottom here within a tick, 81, 80.75, and 81 and a quarter. It looks somewhat weak. The expectation is it's likely to flow through and push down towards 75.50. So with that being said, the expectation this morning, we're trading at 82.50. We're opening in range, in value against the point of control. The expectation is for a fairly noisy open, an open auction in range. The expectation is for the market to open on both sides, fairly muted, fairly quiet, make an attempt higher, and then the expectation is for it to roll over and start working its way down into the naked point of control at 78.50, and then again to 75.50 on that large point of control. I'm going to drag this composite forward. So we've been in this balance range for a while. It's so important to define what the market condition is that you're in or about to open in. It's very important to do that because it tells you which type of plan you are likely to have to work with that day. Are we in a breakout market plan? Are we in a mean reversion balancing market plan? And what are the areas, the key areas that we are looking to test if we break out or if we stay in balance? And so this dividing line here is right where we are at 81.50, 81 quarter. The overnight low is 80.75. The expectation is it's likely to test higher into that upper high volume node towards the 82, 83 area, actually 83, 84 area. And then the expectation is it's likely to fall through this low volume node and move right down into the next high volume node, which is at 75.50. So that arrow is incorrect because I zoomed the chart out. But right now we're trading down here. The expectation is open auction in range, attempt higher, fail to do so against the upper high volume node marked here in this crowd of prices. It's also the December high. And then the expectation is it's likely to roll over down into 75.50 to test this high volume node here. That's hypo 1. That's hypo 1. So again, chop, push higher, the bias is lower, yet again. And then the secondary hypothesis is pretty much the opposite because we are in balance. The opposite expectation is open auction in range, test lower towards 75.50, find its buyers in this area, and then start to move back through to the other side, to this to this low volume node just above, which is marked at 90. And I'm looking for the 90 to be tested here before the FOMC. If hypo 2 is going to play out, then it's going to likely play out before the FOMC. Once the FOMC announcement comes through, all bets are off. And we essentially, what I do on the FOMC is I take what happened earlier in that session, I consider that almost like a new Globex session, as if it happened in the past, because the market revalues what the FOMC has to say. It's the biggest and most important driver right now. And so it revalues it. So I have to look at the past as if it's another session, and I'm looking at everything from the FOMC forward as a new as a brand new auction. I suggest you do the same. So that's how things are shaping up right now for hypo 1, hypo 2, and again today, we're likely to see some squaring up, some fairly intermediate term action, swings, and so on. And then just relax, just sit tight, wait for the FOMC to do its thing. There's nothing worse than hitting your limit on the session too early before a major number comes in. Just wait for the FOMC. I strongly suggest, unless you have a lot of experience, I strongly suggest you do not trade the FOMC announcement. Let it set up and look for a three-wave pattern to trade. Otherwise, just sit tight. Volatility is likely to come in and opportunity will show itself. It's hard for you as a trader to see opportunity when you're immersed in a bad trade and you're trying to defend a bad trade. It's not a good position to be. Just relax. When you're committing your money in the market, make sure you understand how much you're committing and how much you're willing to risk to find out if the market's if your idea is in alignment with the market. That's our goal. Good luck today, and I'll catch you tomorrow. Take care.